Hey, what's up, everybody? What's going on? It is Tuesday, May 25th. So, what happened? Big rally in the bond market today. Bond yields coming down. A very, very successful two-year auction, two-year notes. And I'm starting to hear some commentary, not a lot, little bit, but it's starting to happen, right along the lines of what I have been saying for weeks, maybe months now, that the feeling starting to emerge in the bond market, among these bond market vigilantes, that, hey, maybe the Fed really isn't going to raise interest rates. And I've been saying this all along. Powell, the Fed, has been saying, we're not going to raise interest rates. We're not going to raise interest rates. We're not going to raise interest rates. And I've explained to you that the central bank, the Fed, is the monopolist rate setter. Has nothing to do with inflation. All right? Inflation could be 1,000%. It could be 20 million%. If the Fed wants interest rates at 0, or 25 basis points, or 10%, it could set rates wherever it wants. That is the power of a monopolist. It sets prices. And I've also explained to you so many times that policymakers, they tell you what they're going to do. They tell you what they're going to do. Not necessarily because they're obligated. They want to tell you what they are going to do as a signal to the market. For whatever reason, they tell you what they're going to do. Like Congress tells you whether it's going to raise taxes or cut taxes or increase spending or cut spending. They tell you what they are going to do. Our job is just to sit around and wait for them to tell us what they're going to do. And then we strategize from that. And hopefully, you have some patience and you have some mental game and you make money. It's as easy as that. Now, the mental part, sometimes it's not easy. I've been through this a lot personally, and I've coached people and I've seen people not be able to handle the mental part, but that's a whole separate thing. I'm not going to talk about mental game today. And I've also been telling you that commodity markets are showing steep discounting of prices as we go out over the next 12 months. And you can go down the list. You go down the list. Lumber, corn, wheat, copper, soybeans, crude oil, natural gas, gasoline, sugar, coffee, cotton, you name it. They're all showing the same term structure. Now, if it was just one of them and the rest of them were all showing higher prices in forward contracts, then, that might be a condition related to one particular commodity. But they're all showing that. But the thing to me, the most striking thing is you have all these, very serious people on Wall Street, right? And they're always telling you, don't fight the Fed. Don't fight the Fed. But at the same time, all of these people and a lot of these lunatic quack nut jobs out there who command a lot of following, they're always talking about the Fed and print money, print money, print money. We hear it all the time when, I've explained so many times the Fed is a bank. It does three things, right? It lends against assets, it regulates the financial markets, and it sets prices by virtue of its rate setting power, all right? There's no printing money. Congress, the fiscal authority, yes, they print money. When they send out you out a check, a Social Security check or a $1,400 stimulus check, that's money in your pocket. When the Fed buys assets, It's just exchanging one form of cash for another, right? But these people are so fixated. So anyway, they, all we hear is don't fight the Fed, don't fight the Fed. But then when they see, the Fed conducting QE, and maybe when they see the government spending fiscal, they're like, suddenly, the Fed's got to raise interest rates. The Fed has got to raise interest rates. They jettison this, mantra that they've been telling us all along, which is don't fight the Fed. That's not useful for them anymore in their narrative, in their story. So they got to get rid of that. And now they're saying, fight the Fed. Fight the Fed. The Fed has to raise it. They're getting so mad and they're getting so frustrated. The Fed has to raise interest rates. It just has to. And the Fed is sitting there saying, we're not going to raise interest rates. We're not going to raise interest rates. We're not going to raise interest rates. It's really an incredible thing to watch, these people. Because, and I've spoken about this many times in the past, their contradictions expose their ignorance. Their contradictions expose the weaknesses in their understanding and their story. All right? So now some of them, it's a trickle. And the quacks and the really committed ones, and you know who I'm talking about, they're never going to get off this story. But some of these, very serious Wall Street types, I saw one today saying, hey, and this is like a guy who is a big time economist and market analyst, very well known. He's always paraded out there on CNBC. And for months he was saying, the Fed has to raise interest rates. And he, the CNBC people, they look at him like, he must know because he's a big time economist and, he's a market analyst and he was with this firm, this well-known firm. And today he's like, well, maybe the Fed is not going to raise interest rates after all. And I'm like, really? You're finally listening to what they've been telling you. And I've said this all along. If the Fed came out and said, okay, we're going to start raising interest rates, I'd be the first one to tell you, short the bond market. Go short the bond market. It's not what they were saying. This is an easy game. The hard part is the mental game. It's staying focused. I did a podcast today. It'll be out tomorrow. And I talked about one of the things that really I took from that hike in the Grand Canyon. And it came to me not by any special training or anything like that. It came to me, it was almost like instinctive or a survival instinct because it was so hard and so tough at the end. I thought I'd never get out of the canyon. But it was this instinct to just, you got to block everything out. And you got to focus down to the narrowest, most fundamental thing you got to concentrate on. For me in the canyon, it was just like putting one step in front of the other, taking one step and then taking another step. Because if I looked up at the rim, or if I looked at my watch, how much time we had left to go, it became daunting. It became overwhelming. I would have shut down. I had to just concentrate on that next step. And the mental game is a lot like that. You got to shut out all this other stuff. Anyway, so that's what's going to happen. We're going to get, rates are going to come back down. The Fed's not going to raise. The really high CPI number we saw in April, that's going to start coming down. So, I called this. I've been talking about this. All right? They tell you what they're going to do. I don't know how much more clear I can be about this. They tell you what they're going to do. Everyone's trying to second guess. No. They're happy to tell you what they're going to do. They're proud to tell you what they're going to do. So think about that. Anyway, yeah, the podcast will be posted tomorrow. Listen to it. I talk all about my hike and then the markets and stuff like that. But don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.